Well, looking at it, I mean, from the onset of the financial crisis, we've had pressure being piled on this business. And looking at your headlines on your announcement today, the toughest trading environment to date experienced during the first half of the year, that coming to bear on your earnings and, you know, because of your exposure, I guess, to the building and infrastructure space and the construction place, pretty much having set the tone for you already, right? It's just an industry trend.
That's quite correct. I think the important thing is making sure that you go through these times and work all the aspects of the business and ensure that you learn a lot of lessons through these kind of exposures. And from our point of view, we think we've done a lot of work. We've been through difficult times, there's no question. We always anticipated that the building industry had been running reasonably strong, and that at some stage it would cool off, and that infrastructure, the big spend that was going to be made, and that is why we positioned ourselves for infrastructure. Unfortunately for us, it was the onset of the financial crisis, and both elements of those became exposed to.
And with that, some repositioning and some re-engineering has been the order of the day. You've seen some withdrawal of investment in the building industry as well. What kind of shift are we looking at here within the business strategy?
Well, what we're certainly doing is going through all our business models and ensuring that where we apply capital and the way we run the business, that the business is structured for the times that we're actually going through. So we believe a lot of work has been done on that basis. The market going forward, the consumer in South Africa is extremely stressed. It's still, the consumer is still running at about 80% of debt to disposable income, and it will still take some time before we see some traction in the building side. Fortunately, in some respects, our business relies on refurbishment, additions and alterations, and that has sort of assisted us in going through this difficult period.
With that being the status of the South African consumer that you've just outlined there, I mean, what's interesting is that, yes, we've had HEPS down 67%, operating profit down 49%, margins lower as well, yet revenue was up 4.8%. It's a marginal gain, but how exactly have you accomplished that, you know, with the other facets under such pressure? It's got to mean that you've managed to push prices through somewhere.
Certainly what we've done is we've made sure that we've taken the opportunities where we can on the pricing model. The consumer is definitely buying down in terms of product. The situation is it's a big balance between the volume going through our business from an economies of scale point of view, and wherever possible the brands of Dawn, the likes of Cobra, Iska, all the different brands that we have. They are very well-known brands, and they still have a quality and a proposition, and those certainly have added to the strength of the momentum that we've managed to achieve at this point.
Is that what's gaining you market share? Because you've increased market share by a total of 4% for this year.
I believe that position has happened over the last 4 years. It's about an average of 11 percentage points over the 3-year period. I think that's certainly part of it. I think the other element of it is the fact that the company's value proposition is about just-in-time supply. Now, when the retail merchant actually reduces his stock holding, obviously it's important for him to still be able to have quick source to product. And Dawn in its entirety actually provides that service. So what we generally find is an increase in frequency of invoices or transactions, but at lower values. It's all about timing to get to that just-in-time demand that exists.
And exactly that's been the trend in the construction industry as a whole, where we've seen those pressure mounting on margins, where, you know, it's all about chasing volumes at some stages, the compromise of the margin and, you know, pricing levels, so to speak. In that context, economies of scale, as you touched on earlier, become front and center. Operational efficiency become a focal point. Now, we've seen operating expenses increase 19%. How much of that is actually in your control, that you can get more of a handle on things?
Well, I think certainly from our point of view, we have managed to keep our overheads increase at about 8% over the 3 years that we're referring to in respect of the financial crisis. But certainly we've continued to do the investments that we believe that are critical for the business on a long-term basis. So we've continued to do that. We also had, in some of those increases, In the first year of the financial crisis, we did not make any salary increments, and we caught that up, so the comparatives also had to be brought into the process. I think along with that, electricity and the cost of the basic utilities today has gone up quite dramatically. We are obviously working with Seckam and the CSIR, reviewing all our businesses to ensure that we can actually bring those electricity and those utility costs down.
Taking strategy beyond South Africa's borders, I mean, you already operate in selected countries in the rest of Africa, Mauritius being one of them. What's your Africa strategy?
Our Africa strategy is we are making a very strong thrust into Africa. Our objective is to increase our distribution network throughout the continent. We have been very successful in certain areas. We have had one or two issues that we've had to deal with. Angola is one of them. We have structured in Nigeria the appointment of 17 or 18 new distributors, but we certainly believe that the objective is to get distribution network through Africa for Dawn's products. We believe there's an enormous opportunity from a point of view of infrastructure and of building in Africa.
So in terms of your outlook moving forward, are there any signs that you've received that we might be closer to the bottom here?
I believe that we hit the bottom, certainly from a South African point of view, probably in the period from November through to March of this last year, the March we've just passed. The fundamental problem that we felt in the first half of this or the second half of this year was that the GDP growth in the first quarter was 4.5%, and then the second quarter was 1.3%, and that was felt. Of that there's no question.
Yeah.